Hi, welcome back to another edition of Beyond the Bank. And today I want to talk about the fallacy of getting the best interest rate. You know, oftentimes I'll have people who call me and the first thing they ask me is, John, what's your interest rate? And there's a lot more that goes into it than just quoting a rate. First off, I find that the best interest rate on the wrong loan program or strategy can cost you thousands. And what I mean by that is you have to take into consideration several different factors. Number one is what drives interest rates? Did you know that interest rates change every single day? You know, interest rates are driven by mortgage-backed securities, and these are bonds that are traded in the open market. You can look them up. Fannie Mae, Freddie Mac, they've got these bonds, they're trading every single day. And so literally, market interest rates are changing every day. And what drives the bond to sell and is, number one, inflation. Inflation is the arch enemy of bonds. So when we have inflation creeping into the economy like we've seen the last 12 months, we've seen interest rates rise by 0.8%, and inflation is a big driver of that. Economic news. So when we've got reports like weekly earnings have just hit an 11-year high, well, that might indicate that we've got a little bit of wage pressure inflation, again, driving interest rates higher. Political news and geopolitical news, certainly worldwide economic news also affects the cost of mortgage-backed securities daily. So again, interest rates are changing every single day. Also, when you're looking to get the best interest rate, there's something that's called loan level price adjustments. And since 2009, there's been about 30 different factors that make up what your interest rate or what your cost of money is going to be. I'm just going to give you a few examples. Your property type, your loan size, your credit score, how much you're putting down, how many units, your occupancy, and there's like I said, there's about 30 things total that make up your loan level price adjustments, and these are what is actually going to determine what your total costs or adjustments are going to be for market interest rates. And finally, there's a lot of lenders that do bait and switch. This is a practice that's been fought, but it still happens today. They're going to advertise, maybe bankrate.com or some of those other websites, that they're going to advertise really low interest rates. But what you're going to find is the fees that go along with them. You know, you can pay a whole lot of money to borrow money, but that doesn't always make sense. Again, the best rate on the wrong loan program can cost you thousands. So looking for the best rate isn't always going to be the best answer. What I would say is, let me help you develop a strategy that not only meets your long-term and short-term financial goals, but also your equity and payment objectives. So I may be able to find you the best interest rate that meets with that strategy, and that is where the power of working with a professional is going to come into play. So again, shopping for the best interest rate, it's a fallacy. It doesn't exist unless you know all of the factors that are going to make up that rate and what day you lock on and how long you lock for. All of those factors need to be analyzed. So work with a professional. Leave me your comments below. I'd love a chance to work with you one-on-one. Thanks for tuning in to another edition of Beyond the Bank.